The RBA meets for the final time this year and economists expect rates will lift to a 10-year high. That will be 3.1%. Rates are still historically low though, but it's been a steep increase since the beginning of the year and households will certainly be feeling it. The mortgage is most families' biggest cost, and on top of that, inflation is making essential items expensive, and the price of energy, well, we know that's just going to get worse as well. Quarterly inflation figures showed that prices did drop slightly in the last couple of months, but nowhere near enough to make Governor Philip Lowe comfortable. Let's bring in Kenny Heatley now. He joins us. Kenny, so the likely outcome today from that RBA board meeting is a rate rise.
Yes, that's right. More cost of living pressures, Laura, to wrap up and put under the Christmas tree. Here we go again. If they do raise rates, it'll be the 8th consecutive rate rise in a row, the most aggressive tightening of monetary policy we've seen from the RBA since the 1990s. And as you say, 3.1% is the potential by the end of today, which will be the highest cash rate that we've seen basically in the past 10 years. So the consensus is amongst economists and also the banks is that we're going to see a 0.25% rate rise, so 25 basis points today. So how does that affect mortgages? Well, Rate City have done the calculations for us, and on a $750,000 mortgage, you're looking at an extra $113 a month. But if you add up all the rate rises that we've had this year, it's an extra $1,251. Blow that out to 1.5 million, you're looking at an extra $226 a month, and the extra that you're paying this year from all the rate rises is $2,500. Now, Chief Investment Officer at the Motley Fool, Scott Phillips, was on Sky News earlier this morning with his thoughts about what's happening behind these doors today.
Almost certainly. We'll see a 0.25% increase today. Now, I say almost certainly, nobody knows. There are always two questions with these things, as we say every time. What should they do? What will they do? They're very different options potentially for the Reserve Bank. The simple reality, mate, is we're sitting between 2 and 3% interest rates right now. The RBA has previously described that as neutral.
Now, Treasurer Jim Chalmers released a statement as well ahead of the RBA board meeting this afternoon saying, we know these are harsh and heavy times for Australian households. On top of climbing grocery and energy bills, the average family now has to find around $500 more each month on mortgage repayments since rates started rising before the election. We are absolutely focused on doing what we responsibly can to ease cost of living pressures in ways that don't add to inflation. Inflation, of course, is the big problem. No doubt, Laura, the Treasurer is a bit unnerved that this is all happening on his watch. And like Chris Phillips was saying, we won't know the answer exactly until we get that RBA board meeting and the result this afternoon. So we'll just have to wait and see.